The upward movement in silver prices might come as a surprise to some, but it reflects the shifting sands of monetary policy expectations in the United States. As of Wednesday, silver experienced a modest increase of about 1%, trading near $38.30 per ounce. This marks the second straight session where prices have gained, primarily fueled by recent U.S. inflation figures that have bolstered the market's anticipation of a Federal Reserve interest rate cut as soon as next month. What's intriguing here is the inflation data itself. Headline inflation held steady at 2.7%, contrary to expectations that it might rise slightly, potentially driven by tariffs, up to 2.8%. Meanwhile, core inflation, which strips out volatile food and energy prices, nudged upward to 3.1%, reaching its highest point in half a year. These figures suggest a mixed yet notably persistent inflation trend, prompting investors to reconsider the likelihood of easier monetary policy. Market forecasts are now heavily skewed toward a 94% chance that the Fed will reduce interest rates by 0.25 percentage point in September. Furthermore, there's also considerable speculation about additional rate cuts before the year wraps up. This dovish tilt in monetary policy expectations often boosts precious metals like silver, seen by many investors as a hedge in uncertain times. Beyond economic data, geopolitical tensions remain a focal point. Investors are anxiously awaiting this week's diplomatic discussions between the U.S. and Russia in Alaska, centered on the ongoing conflict in Ukraine. Interestingly, the White House has described the upcoming meeting between President Donald Trump and Russian President Vladimir Putin as primarily a listening exercise, which has dampened hopes for a quick resolution or a significant breakthrough toward a ceasefire. So while the markets are riding a wave of rate cut expectations, the geopolitical landscape still adds an element of unpredictability. Does this signal a broader shift toward easing policies, or will geopolitical tensions throw a wrench in these plans? Share your thoughts. Are we headed toward a new phase of economic optimism, or are geopolitical risks still lurking beneath the surface?